Okay, hey, so you're a first-time home buyer. Welcome to the show here. We've got Jeff.loveland with Guaranteed Rate, and we're just going to be kind of talking like two folks out there in the street. Hey, so I'm a first-time home buyer. What do I need to do? Obviously, I need to find a house.
Well, I would even take a step back before that. Before you find the house, number one, you got to get in touch with a great realtor, which they've already done, right? Because they're talking to you. But the next step is get pre-approved, right? Because you don't want to look at something that you can't afford, or maybe it's a step or two away from where you're at, right? So that's why I always say start with getting pre-approved for your home loan if you need financing, just to see what your budget is too. Because it may be the fact you can qualify for the house, but maybe you don't want the monthly payment that comes along with it. That's a huge, huge part of the first step I do with first-time home buyers.
Okay, so what do they need in that process, right? So what do they, I know what you need, but when I send somebody to you for pre-approval, they're looking for a home, what sort of info do they need to give you to get pre-approved?
Yeah, so first step is doing an application. Within that, we check credit, income, and assets are the big three things, right? So credit is pretty self-explanatory. Your credit scores, your income, how much money you make, and then your assets, what you have in your bank, your retirement account, or what you're going to get from a gift fund from family members. Those are the big three things that we look at. We also look at things like, have you had any bankruptcies, foreclosures, but from there we start to develop your budget and also what your scenario for your house looks like. Once again, going into the details of what's your max monthly payment you want this to be, and how much do you want to bring in for down payment, and we start to develop that for the buyer.
Okay, so I'm just going to pretend like I've never dealt with this before,
Sure.
right? So I'm going to ask you some questions. So you're going to run my credit, so you probably need my social security number, right?
Yep.
Are you just taking my word for it on my income and then eventually we verify it, or do you need my tax returns?
That's a great question. So with the application, we're just taking your word at first. That's what's called a pre-qualification, right? So you'll hear people say, we'll get you a 5-minute pre-qualification. Well, that's just going off your word. And not to say that you're a liar, but maybe you're going off your net income and we can actually go off your gross. But what we'll do is follow up with requesting for your pay stubs, right? And we'll request for your W-2s and your tax returns. So every employment type is different, whether you're an hourly employee or you're self-employed. But yeah, we'll ask for all that documentation just to verify what you put on the application is accurate.
Because a pre-qualification is going to be different than a pre-approval, especially when it comes to making offers on a property, right? So we're out, let's say you're out with me, right? We're out looking for homes. As you know, as of late, it's been a seller's market. This video should be down below as far as when we shot it, but we're looking at July 2021. It's kind of cooled off a little bit, but for the most part, there's still typically multiple offers on worthy properties. So if I'm a seller's agent, okay, obviously in this scenario I'm representing you, but let's say I'm a seller's agent and I'm looking at offers that are coming in. And in this multiple offer scenario where everybody's going over purchase price, people are doing appraisal contingencies and waiving appraisals, which we'll get into later, which will be in a different video. They need to know that, hey, that's great, $50K over whatever, plus appraisal gap of X amount. That's a great offer. How do I know it's legit? Okay, and that's where you come into play, right?
Right.
That's why the pre-qualification essentially is different from the pre-approval, because you can get in trouble for that as well too, right? At least they'll get mad at you.
Right. Well, yeah, no, you're absolutely right. I could get in trouble, right? Get license yanked if I'm doing shady pre-approvals and I haven't done my due diligence, right? So I can get in trouble from my licensing, but more importantly, I'm damaging my brand and my reputation with not only the clients, but the sellers, the realtors, everyone involved, right? Because they're banking their word or their expectation on my word that this is a good pre-approval. And if I haven't done my due diligence, if I haven't asked you as the buyer for your pay stubs, for your tax returns, for your W-2s, and I'm just going off of what you said, well, that deal could fall apart if any of that isn't correct.
Which can happen, right? You can get under contract, the deal can start to fall apart, and then people start getting really upset.
Yeah.
So they get pre-approved, all right, and then so they send you that information. Mm-hmm. How long does it typically take you to turn that around for a pre-approval letter?
Sure. Once again, depends on the employment, but I would say your standard, you're probably within 24 hours, depending on, we like to do what's called a verification of employment, right? So we also want to make sure we reach out to your work, make sure that you're actually getting paid what you've said you've gotten paid. It's matching up with your pay stub, right? I want to make sure that this wasn't your final pay stub that you just gave us, right? And you've now quit that job. So that's why it's a little bit longer than an hour or two, because we want to make sure that we've done all that due diligence up front, which helps us out twofold. Number one, you really have a solid pre-approval in hand, but number two, we've already done that up front. So now if we need to tighten up some deadlines, like you said, it's kind of cooled off, but it's still a competitive market. Mm-hmm. And let's say we need to close quickly, 15, 16, 17 days. We've already done a lot of that legwork up front, so we can get things done quickly.
15 to 17 days.
Yeah.
That's a good time.
Yeah.
Usually 30-day close is quick, but that's pretty nice.
I mean, the market demands what the market demands.
The market, people want to get paid quickly. It's the craziest thing. They want to get out of their house most of the time. Okay, so I typically find myself out on the weekend as a realtor here in Denver, and I'm making offers, right? And sometimes I'm making offers late at night, especially if I want to be competitive and maybe put like an acceptance deadline. I'm trying to get a little bit like a bully in there, although I really don't have a lot of leverage right now in this market. Still, I'm trying to do what I can to get your offer accepted, okay? As would any realtor. So let's say I need to get a pre-approval. They've been looking at homes. In most cases, they find a home they like. They're like, okay, what's next? I'm like, do you have a pre-approval letter? They're like, no. Okay, well, let me refer you to a lender. In this case, I refer you like someone like you, Jeff.loveland here. So I send you over something. Now, some lenders are able to do some stuff kind of quick, but I think they still wait till Monday to verify. So either way, you're able to pretty much crank out a letter though that night. For the most part,
like you said, if you're going out Saturday, 6 p.m., whatever, and you give me a call, absolutely.
Okay.
Absolutely. So with that contingency that we have to say, hey, we still need a verification of employment to make sure everything's on the up and up. But if your clients can get those pay stubs, those bank statements, all that stuff over to me that night, if you can tee them up, within an hour or two, we should have a letter in hand.
Great. So I think we've covered the pre-approval side. Another thing that I like to do, which a lot of other realtors do too, is have the lender call the listing agent and just kind of say, hey, look, this person checks out, they're good to go, the money looks great. Just to kind of give another vote of confidence, right?
Right, absolutely.
Because they're going to be looking at multiple offers and they're going to go, well, who's for real?
Right.
How can we verify who's for real? And that's going to be a huge indicator. So that typically goes till Monday. So you're usually able to get your verification, do all that, and still call them.
Right, absolutely. And even if it's a weekend call, say, hey, this is where we're at, this is what we've received, and everything looks great. Sometimes those verification of employment, if they're bigger companies, they're actually put into a database that we can pull automatically. So it may not have to wait till Monday. But yeah, absolutely, calling the listing agent, letting them know that we're all on the same team, right? So as far as the real estate agent, the lender, and the buyer, we're all going in the same direction, and this is a solid package deal as far as getting this offer accepted. That's a huge part of it. I think it is a big vote of confidence for the seller's agent, which then can push it to the sellers and say, hey, listen, we got 15 offers, only 1 or 2 of these lenders had reached out, so we feel really solid about these.
So their guy was offering IOUs. And you just don't take those here.
Right.
Okay, so we'll address credit scores. This is all assuming you have a good credit score, you qualified, you're pre-approved. Let's get under contract. Boom. Hey, congratulations. Okay, we're jumping, we're high-fiving, we're crying. It's like we just won a medal in the Olympics. We have an offer accepted, okay? The next steps. Let's go down the line here, okay? Sure. So typically you're going to need to put some earnest money down, to show, hey, look, I'm into this property. This is what's going to happen. We usually structure that in your contract. It's usually a few days after you get under contract. You then need to either wire that money or, deliver good funds to the title company to hold that. It's usually, I don't know, it's like $5 to $10 grand. Just depends on how much the property is, right? It's usually a percentage of that. So that happens in the next few days. Okay, then I schedule your inspection very quick, or your realtor schedules that inspection very quick. I usually like to knock it out in the first week. Okay. Now, in this market, there's a lot of stuff going on. We're not going to talk about waiving inspections and all that, but just let's talk about it from a first-time home buyer loan side, since I got you here. Okay?
Standard process. Yep.
Standard process. So we have an inspection. Okay, the inspection comes back. Let's just say, especially out here in Denver, hail damage is a thing. People get hailed on their roofs. Hasn't happened for a couple years, but people might have hail and not even know it. I just went through this with another buyer. So we put the objection now, okay, hey, we need you to fix this roof, okay? And that's in our inspection objection, and there's usually a deadline for them to address that, okay? How they're gonna fix that, what's gonna happen next, right? What needs to happen on your end
While that's going on?
while that's going on? So
Yeah.
let's just talk about the lender's side of the home inspection. What needs to happen to progress that loan forward?
Yeah, absolutely. So a lot of the heavy lifting comes in that first week or so. Going under contract. Like you said, you're depositing the earnest money, you're sending the earnest money check to your lender so I can evidence that it's came out of your bank account. Everything looks good there. Now the next thing for us is we get we have your loan disclosures sent out, which is basically a breakdown of your loan. So purchase price, how much money you're putting down, what your interest rate is, what your monthly payment, all the fees that are associated with the loan. So you're having a very thorough breakdown of what this is going to cost you, what this home is going to cost you. That's sent out within the first usually 24 to 48 hours. So very quickly. From there, it goes into my processing team. My processors, think of them as assembly line workers, right? I'll hand them the blueprint. This is the loan we're doing. They need to collect all the parts. So the documentation, additional documentation from a borrower, right? Maybe an updated pay stub. Maybe the last pay stub they sent us was 30 days ago, so they've been paid a couple times since then. Gathering all those things up for my underwriter. Now that all occurs in usually the first 7 days or so. So we can get into underwriting pretty quickly. The only additional thing that we do that kind of coincides with the home inspection is ordering the appraisal. If the inspection checks the bones of the house and the roof of the house, making sure that everything's good, the appraisal checks the valuation. You want to make sure if you're buying a $500,000 house, it's worth at least $500,000, right? And the bank does too, because they're backing that asset up. So what you want to do is after you, and this is in a normal market, after you have a positive inspection or good negotiations on the home inspection, we'll pull the trigger on the appraisal so we can get that going as well. So that's typically what the first 7 to 10 days looks like of the loan process.
Okay. And how does any of that change is there any change at all with condos, HOA? Is there any info in that regard? Let's just jump over really quick, because
Sure.
It's usually single family or condos, right?
Sure.
Or townhomes.
Sure. For the most part, the skeleton of that is going to look identical, right? The only thing different from there is we have to do what's called a condo questionnaire if it's a condo. We want to reach out to the HOA, make sure that we're getting the documentation there. So your lender might reach out to the real estate agent, most likely to the real estate agent, to get a condo contact or an HOA contact.
Sure.
So we're getting that. But realistically, that's the only difference. Everything else is going to be very similar, because we still need pay stubs, we still need bank statements, we still need the disclosures, we still need an appraisal. All of that is going to look very, very similar. The only caveat I will say is if it is an FHA or VA loan, we want to make sure that that condo is approved by FHA or VA, which your lender and your real estate agent, so in this case you and I, would have had that conversation before you even put an offer in.
Okay.
And so they should be checking that, because you can check it online. It's very simple.
Okay, so hey, look, we've got our earnest money in. The inspection, let's say, came back just fine. Okay, everything looks good, maybe a few minor items. Hey, I need you to fix the crown molding, okay? Not doing it in this market, but still.
Sure.
A little different, right? And let's just say we're not even doing any appraisal, contingencies, as far as no appraisal gaps, as we call them out here in Colorado. Mm-hmm. We'll talk about that in a different video. But let's just say purchase price, that's what we're going for, okay?
Yep.
So the home is, let's just say, $500,000, a nice round number. Okay, now we've gone past the inspection phase. We are now in the appraisal phase.
Mm-hmm.
What does that look like on your end? Because you obviously ordered that appraisal.
Yep.
Right?
That's right.
These appraisers are busy people. I never see them. They're like ninjas, okay? But they come out and everything's appraising right now in Colorado. I mean, we'll see when that changes, but right now everything seems to be appraising. What is that process like from you to the appraiser to the home, right? Mm-hmm. And back, and we'll play a couple scenarios after. I'll ask you a couple different scenarios.
Sure. So basically what you have, and most lenders have this, is either an appraisal management company or an appraisal desk that they hire in-house. Essentially, you have a group of appraisers. Each lender has this. It's called your panel, right? So for the Denver area, maybe we have 15 to 20 appraisers on this given panel, right? And because of some of the things that went on during 2006, 7, and 8,
what happened?
There was a crash. I'll tell you about it later. Maybe another video.
Is it in history books?
Yeah, it's in. I think they made a movie about it.
They did make a movie about
it. But anyway, I think one of the big things is, as a loan officer, I am not allowed to directly communicate with an appraiser now, because they do not want me to hint, nudge, indicate any kind of a value to that appraiser, right? Mm-hmm. To direct them. So essentially, I order it from the appraisal management company, or in our case, we have an appraisal desk in-house, who then issues the order out to these 15 to 20 different appraisers and see who can do this appraisal within the time that we've requested it at the price that we've requested it. And so whoever accepts that job then becomes the appraiser for that particular loan. So I've requested it, they've accepted it, they then contact the seller's agent, or if there's not a seller's agent on the deal, they contact the seller directly to schedule a time to go out to the house, walk the house. During this process, they'll walk around the house, they will take a look at the inside of the house, they'll do measurements, they'll do laser measurements, they're pretty cool, and then they'll determine square footage. After they've done their inspection of the house, which is not to be confused with the home inspector, but they call it an inspection of the home, right. They then go back and pull comparable sales. So basically houses that have sold in the area that are like that home, right? So they're not going to compare a single family home and a condo, for example, right. But maybe they'll look at our house, it's a single family home, all single family homes that are within a 1.5 square radius that are equivalent in age, right? Maybe this one was built in 1980. Mm-hmm. So ones that are built similar time frame and develop their value off of that. Okay. And then the appraisal sent back to us.
Okay, now let's say so it's 500, right? This house is 500. This is our fictitious home here. Okay, for the Smiths, and it comes back. Yeah. It appraises.
Okay.
Well, how does that work for their loan? Now let's go back in time for a second. Let's say they're putting 20% down. It's not FHA, it's conventional loan. Mm-hmm. They're doing 20% down. So they're putting $100,000 down, which let's say they put $5,000 towards earnest money. So right now, currently they're coming with that, $95K cash so far to closing, right? And their loan is going to be for $400, correct?
Correct. You got it.
Okay. So appraisal comes back. Barring any unforeseen issues, we're good to go. We're moving on to the next steps, right? Now, pause for a second, okay? Let's say it comes in. No, we're not going to do that. We'll talk about a different video. It's just going to get too confusing. So let's just say you're good to go. On to the next step, okay? Because I typically put my loan termination deadline about 3 days before closing, usually on a 30-day close. Okay, because as a buyer, you're going to have a couple different moments to where if you're not seeing things you like with that property, you're still able to cancel, terminate and save your earnest money as long as you're within your deadlines, right? Your home inspection deadline, your appraisal deadline. And then the last one is, what are the terms of your loan termination deadline, which is 3 days before closing. You are still legally allowed to do that. So you don't want to go into it thinking that way, but obviously you've got these different outs if things aren't shaping up the way you had thought.
Right.
So the next step from that, when do they get their final, what's the next step from you, your communication with the buyer?
For sure. Okay, so we've already talked about the appraisal, right? It's on its way back in, or maybe we've already received it. I've already talked about the first step. My processor has gathered up the documentation. We've sent it in to my underwriter, right?
Right.
Think of her as quality control, right? So she's checking all the boxes, making sure we're playing by the rules. We have all the parts that we need to build I talked about the assembly line, build the car that we're building, right? But let's say that we're missing a few items. One of those items typically is the appraisal, right? Because we haven't gotten that back. Let's just say it hasn't been back in the first 7 days, right? Because appraisers are, like you said earlier, are busy right now. Yep. So we need an appraisal. Maybe we need an updated pay stub. Maybe they're getting a gift. It's $100,000. Maybe mom and dad are gifting some money, and so we needed a gift letter from mom and dad saying that they're going to give $20,000 of the $100,000, right? Yeah. So we have 3 items now. Once we get those items from the borrower and the appraiser, we then submit it back to our underwriter. She checks those remaining 3 boxes and said, yep, you got the appraisal, it came in good. You got the gift letter, that looks good. And you got this updated pay stub, that looks good. you now get what's called your clear to close or your final approval.
Boom.
So that's, in the mortgage world, real estate world, really that is the breath of a relief. Hey,
the last high five.
Yeah, that's the high five, right? And so that means everything looks good. I'm calling the borrower and saying, hey, you're out of underwriting, no more jumping through hoops as far as getting me documentation. We're good to go to what's called the closing department. Now, essentially what my closing department does is they gather up the documentation for the title company, which we can get into, but they gather up the documentation, they balance your final figures. You had mentioned there's a few things, the earnest money they put on the line, right, and the down payment. So all in, they're $100,000 plus the home inspection and the appraisal, right?
Right.
Now, the only thing outside of that, there are closing costs that come with loans. Correct.
Which is great, because a lot of folks wonder, hey, how much is this all going to cost me? How much is my inspection going to cost me? How much is my appraisal?
Right.
What are my closing costs? This is great.
Right. And we're going to talk generalities here, because every house is going to be a little different. Property taxes affect your closing cost. If there's an HOA transfer fee, if you're buying a condo, if there's a transfer fee there, that's going to affect it a little bit. But typically, you're looking, a good round number is usually about 1.5% to 2% is a good idea of what your closing costs are going to be off your loan amount.
So $5 to $10 grand on a $500,000 purchase price.
You're going to be right in that range, exactly. Usually closer to the lower end of that, but once again,
typically,
the condos are going to be a little bit higher if they have a HOA transfer fee, right? Those can be a little bit higher end.
Right.
So, but now we've gotten your down payment, we've gotten your closing costs, we've bundled that up. That's what's called your cash to close, your remaining balance, right? It's your bill after everything has been tallied up. Your earnest money goes towards a credit towards that bottom line. So does paying for your appraisal, that goes towards a credit of that bottom line. And then we discuss how those funds are going to get to the title company. Usually you'll wire them. If it's that large of amount, suggested is going to do a wire. And we can discuss that in another video as well. But now you have everything set up for your closing, which is the best day for everyone. They all like that one. And we kind of go from there.
Yeah, so then you're closing on that property. When is their first mortgage payment due?
Sure. It's the month after it skips the first month after you close. So we're in July right now, right? Let's say you close tomorrow. Your first mortgage payment, no matter when you close in July, no matter what day of the month, your first mortgage payment won't be due until September 1st. And so if it were to roll into August, same thing, same principle would apply. Now you're into October 1st.
And that's just for basically, so if it was August, it'd be October 1st.
Mm-hmm.
Okay, yeah, it's usually around 45 days roughly, right?
Well, it depends, because if you're on the back end of a month, right, you close on, let's say, July 31st, right, you're only 32 days, but yeah, somewhere in that range.
Okay, great. And so then after that, they get their closing. At closing, typically you get you go through that. We'll interview title as well too, and maybe talk about that in a different episode.
Mm-hmm.
But yeah, they have their balance sheet. You go over that. We sit there, we sign, we laugh, we talk about how stressful it was and how happy we are now.
Right.
I usually bring a little champagne, some champagne, okay? And then you get the keys to your house. Usually, unless there's any other barring contingencies. But that is it for the first-time home buyer. If you have any questions about that, feel free to reach out to Jeff Loveland here at Guaranteed Rate. His info will be in the comment or the subject box below. I don't know what I'm talking about. If you have any questions about the home buying process from the real estate's point of view, hey, feel free to reach out to me as well too. I'm a realtor here in the Denver metro area, currently with Compass Colorado Realty. So hope you enjoyed that video. Till the next time.